Now we're going to turn to Europe, and we just want to start with that high level, looking at the Eurozone aggregate side. And one of the things that we continue to talk about is that things are coming in okay. It's not like things are imploding. It's just it's either in line with estimates, just below estimates, and we're starting to see that creep through. Industrial production was expected at negative 0.2, came in at negative 0.3. Year over year was expected 10.3%, came in at 9.7%. Trade balance was a bit better. Again, employment moving in a positive direction with GDP essentially falling in line. But then you start looking at some of the bigger sides. Construction output was down 1.7%. And when we talked last week looking at Germany, we continue to see that construction slow in not just Germany, actually, and in France as well, putting some of that overhang as we continue to see CPI and essentially just inflation continue to drift higher. So when you look at Eurozone industrial production, this gives you an idea that we've never really gotten back to where we were pre-COVID. And we've had a fairly steady decline since 2017, which is what we've been talking about when we looked at 2017 into 2018 into 2019. And then obviously you had that huge dip in 2020. But there was already a slowdown, and that's just continued to carry out even as things started to normalize a bit. Now, on the other side, Euro area GDP, showing some of that growth, but still well below where we were in 2019. And there's still a much bigger hill to climb. But as things start to slow on China, when we start looking at China, global trade, the ability to achieve that is going to become much harder, because not only are wages and consumers struggling in Europe, there's also less that is being bought abroad, and you're starting to see that weigh on just multiple sides, not just one or the other. So then when we shift over to Google mobility versus services activity in Germany, you can see that we're starting to see some strength. You're starting to see some of this move back up. When you look at services, we're back up to that level. Core retail sales coming right back up. So we're starting to see some of these benefits as they continue to wake back up, coming out of COVID, reopening. There's a little bit of a spread, but I don't think it's going to be enough to slow this down, which is going to be a net positive for some of this growth, especially given how much Germany weights into the Eurozone. But when you look at the debt and you look at just how much is being bought by the ECB, you get an idea of who's taking advantage of it. Well, it's a lot of Italy and a lot of Spain. When you look at what is being purchased, is the Bank of Italy and the Bank of Spain is buying essentially all of those goods, which is going obviously straight to the ECB. So you're just, without the ECB, you get an idea of what rates look like, of what this all ends up looking like, which is going to become a much bigger problem as the needs for debt, not only just new debt but rolling debt, becomes a bigger overhang. And now this is looking at it a little bit differently when you look at it from going through Q3. So this is going into Q1 2021 in percentage of GDP 4-quarter moving average. So the first one is moving average. Now we're looking at just Q3 2021. There is just the ECB and nothing else. So as this continues, how long can the ECB keep this up? We know PEPP is going to expire. We know a lot of these pressures are going to come in, but how do you keep this merry-go-round going when you look at just how much the ECB has purchased over this time period? You see ECB QE, COVID. Again, this is going to become that overhang that we keep talking about on the debt side as they start to see some of that slowdown. Then when you look at just the inflation side, so pipeline inflation has remained higher for longer than expected. When you look at those PPI, core consumer goods, fitted into these different areas. So you're just seeing the pressure points going up, which creates the upside risk to core goods inflation, which is what we've been talking about in the U.S. This is just highlighting it's not just about the U.S. It's everywhere. This is not just a U.S. phenomena. It's a European, Asian, Latin American, which is, again, going to become that revolving door when you look at just the cycles throughout that time period. So then when we look at German wholesale prices month over month, you can see that we had a 1.1, and then the coming down, you had German wholesale prices year over year, 11.3. you're still seeing this strength, and it's outdoing estimates. So when you look at the underlying estimates for what it was expected, the wholesale price index prior was 1.5, came in at 1.1. You're seeing just, again, these pressure points that are going to continue to get fed down, not just to the local consumer, but into the export world, because Germany is a large exporter, and a lot of these price increases are going to get passed down. So when you look at just how is this coming together, where is the pressure coming from overall, that's when you start turning into some of these different regions. So when we look at, French unemployment picking up a little bit, CPI fairly stable. And then when we turn over to Italy to look at some of the Italian side, trade balance has been fairly stable in terms of where things are. But overarching theme is this general slowdown that continues to impact not so much the overall, but really it's the estimate side, where estimates are very high, coming in below. So it's not that they're negative, it's just, again, missing that growth profile, which is putting some of that weight on it. We don't have too many data points to follow on Europe, so this gets to be a little bit shorter. And then things pick back up as we head into next week when we get PPI and some of the other data sets. But now in the next segment, we're going to go deeper into Asia and first start off with Japan, some of the high level, and then go deeper into China and some of how things have accelerated to the downside on the Chinese front.